Even before the collapse of the high-profile crypto exchange FTX, investors had to stomach steep price slides and significant losses in Bitcoin and other cryptocurrencies this year. CNBC senior personal finance correspondent Sharon Epperson joins us now to explain how these investors may be able to ease some of the financial pain. How do you do this?
How do you do it? That's what people want to know.
The tax story?
You'll see. Investors have faced steep losses in many assets this year, including crypto, and Bitcoin has nosedived over 60% just so far this year, more than 75% from its all-time high. But there is a way to ease the financial pain that many investors have experienced in that slide. Now, if you bought Bitcoin before it really tumbled and you sold it or you plan to sell it before the end of this year, you could use those losses to offset capital gains you may have realized from a house sale this year or selling stocks and securities. If you have more losses left over, you can then use them to offset up to $3,000 of this year's ordinary income and then carry forward extra losses in future years. Now, as CNBC Financial Advisor Council member Douglas Bonaparte points out, you can also do this.
One thing about crypto that's very interesting when it comes to tax loss harvesting is that there's no wash sale rule. That means you can buy back right into crypto or Bitcoin and not lose that loss. You cannot do that with a particular stock.
So, for example, you can't buy Microsoft and then sell it at a loss and buy it back the next day. The IRS won't let you claim that as a loss because of what's known as the wash sale rule, which says the same or a substantially identical security, if it's sold at a loss and then repurchased within 30 days, you can't claim that as a loss on your taxes. That rule applies to stocks, but not to crypto, because the IRS views virtual currency as property and not a security.
That's
yes.
Really
crazy.
That's pretty good. The only problem is Bitcoin's so correlated with everything else. It's
I know.
That you don't
have
any gains to offset with the losses.
But I do think it's interesting that for people think if you say
market to market,
exactly.
Yeah, but then you have to use it this year to offset the gains, or else you carry it forward with some 3,000.
Yeah. But at least you can
but
keep
it's
carrying
another
it forward.
area where regulation hasn't caught up with a new and developing asset.
That is amazing.
Exactly.
You can sell it and buy it back 5 minutes later and lock in the
No wash sale rule.
Which is so different.
But it could be $3,000 different 5 minutes later, because we know what a great currency it is.
While you're waiting to try and sell it, to have it go through.
One other question for you. The FTX fallout may have some see crypto as a long-term investment, rethinking where they hold the currency. So I wanted to ask you about that and what are their options?
Well, one of the things that they should know is when your crypto is on an exchange like FTX, you only have access to the assets if that exchange is able to distribute that money to you. So if the exchange has troubles, your money could be gone. So there's another option a lot of folks have been talking about, and that's called holding it offline in a cold storage wallet. And the way that it works, you'll get a key. You got to remember that passcode or a key, but that backup code lets you know that you can get in there and have the sole custody of your assets. People want that. They don't want to necessarily have it on an exchange.
Can I make it slightly harder? Let's say you're an FTX customer. You can't get access to your money. Can you claim it as a loss now?
Reading your mind. I knew you were going to ask me
Even if you don't know if there's a possibility that you might get some of it, hopefully back later.
Can you sell it? The problem is you don't have the assets or access to it to sell it.
How does that work from an accounting perspective?
So you have to be able to sell an asset to be able to claim that loss, right? If you don't have access to it, you're not able to claim that loss. But the IRS does have guidance on different ways to do this. If you are a victim of fraud or concerned about this kind of issue, irs.gov, go there. But again, trying to catch up, they're talking about what happens when it's a Ponzi scheme with stocks, with securities. They haven't really offered the guidance on crypto as of yet.